turn on my computer. Recording in progress. Good morning, Lee. Good morning, Yvonne.
Good morning.
And we've got the team in the room, and it is 9:14. Peter's in the waiting room. Admit. Excellent. Oh my gosh, Peter's in the snow. It did snow in the mountains last night. Did anyone see that? It even snowed. You saw flurries in Vegas? I believe it. What happened?
It's the second time I've came to the flurries.
That's crazy. Although 7 years ago, my Facebook memory from today was me posting that it was 80 degrees outside. Sorry, Pittsburgh, because that's where I came from. 2 years ago, yesterday, I was scraping snow off my windshield in the morning to go to the gym. So who knows? Yeah. Yeah. February in Vegas is a mess. All right, it is 9:15. Oh, okay. Put my glasses on, bring in Tyler. You'll have to, I'm going to bring you up now, Jack. You'll have to watch the side just in case anybody joins. Yeah. Come on over. So guys, thank you so much for joining us. I just think that every once in a while, it's great to hear from professionals in other fields that can help and support us. I'd like you to meet my very good friend, very smart man, Jack Banka.
I don't know about the smart part.
Well,
Friend part.
I believe it. That's right. You know, and one of the things that we tell people, right, when they're like, well, why should I use a real estate agent? This market's hot. And, I can do all this myself because I got Zillow and I've got all these other platforms that I can use. Well, we know what they don't know. And we know that by hiring a professional, we can maximize their dollars. The transaction is going to go smoother. There's absolutely no difference with, like, you want to do TurboTax, or do you want to hire a professional who's actually going to maximize your benefits and minimize your tax liability? I vote for minimizing tax liability, right? So anything we can learn is certainly appreciated. And I wanted to share this information with you guys. So without further ado, I'm going to bring on Jack Banka, and I'll let him tell you a little bit about himself and his specialty, and then we'll go from there. And please, if you have any questions, put them in the chat and we'll get to them accordingly.
Thank you, Pam.
You're welcome.
Yeah, just to build on that, I got Zillow, I got TurboTax. Who needs an accountant, right? So my name's Jack Banka. I am a CPA. I also went to law school, so that's two mistakes and career choices I guess I made. So I have my own CPA practice. I work with small businesses. A lot of them are real estate agents, real estate brokers, under revenues between a couple $100,000 to a couple million. So mostly focused on small business owners. So I'm here to talk about real estate agents, and let's start with who are real estate agents. We need to zoom out.
Nope, we're going to admit someone.
Okay, let's admit somebody. So real estate agents, mostly business owners. My experience is they operate as either a sole proprietorship, meaning they're not incorporated. A lot that come to me ask me, should I set up an LLC? Do I need to set up an LLC? And the answer is usually yes, no matter what. And then the answer is also, are you gonna operate as an LLC? Or the question is, are you gonna operate as an LLC? The IRS calls you guys real estate agents as statutory non-employees who are treated as self-employed for all federal tax purposes, unless you have an S corp. So a lot of real estate agents set up S corps. My advice is, so the tip is, once you get to a certain revenue amount, you want to set up an S corp and kind of minimize self-employment tax. So my tip here is, if you have an entity, make sure you follow the procedures and rules on operating that entity. So just setting up an LLC is, step one, and then operating properly is the hard job. So
like, what would be the difference between operating an S corp and an LLC?
Usually, so if you have an LLC, you have choices there. So LLC is really not recognized for federal purposes. So If you don't do anything, you become a disregarded entity, meaning you report all your tax commissions and expenses on Schedule C. The negative on that is you're subject to self-employment on all of that. If you set up an LLC, you can elect to be taxed as an S corp. At that point, you have to pay yourself as an employee or treat it as an employee, and then you can minimize the self-employment tax. So that's my next slide. I want to talk about self-employed versus employed. Self-employed, no paycheck. Everything you make is a paycheck. Employed, you get a paycheck. Pretty sole proprietor, no paycheck. S corp, a paycheck. So a lot of times I see agents with LLCs set up an S corporation and they don't do payroll. I mean, that's smart for tax purposes because now you don't have to pay Social Security and Medicare, so you're saving on taxes. But the IRS says that you must pay yourself reasonable compensation in return for services, which you're providing services, and that non-wage distributions may be made only before or after you pay yourself for those services. So I see distributions, but no salary. So if you have an S corp, get on payroll. Make sure you have payroll.
So a distribution, like if I paid myself a salary, but I just scored a whale of a commission and I want to go spend that money and purchase a property or something like that. So I could, and I have all this money left over in the business, I could then take it as a share distribution or something like that.
Yeah. So basically I see just, oh, I wrote myself a check because I needed money. That's considered a distribution. And here's another tip. When you do that distribution, put like a percentage of it towards taxes, because at the end of the year, that hasn't been taxed. So estimated taxes, so I would say 25%, 20%, 30%, whatever tax bracket you think you're in, put that in aside in a separate account and for estimates, because that's where I see realtors in trouble too, is I got huge commissions, all mine. So I did my minimum salary that I, the rest I'm gonna go treat myself, you know, and then it's a quarter, I should make an estimate and there's no money in the bank. So that's, I see that a lot. And then at the end, maybe I got 1099 and no tax paid. So.
Ask if they're not speaking. After everybody can mute themselves if you're not saying.
Can you guys mute yourself? If you, oh, there it is, Becky. My next slide, mileage. So mileage is huge for you guys, right? You drive around, show properties, 58.5 cents per mile. You have the option to track actual costs on a vehicle or mileage. Mileage is easier because unless you have a second vehicle, it's, you know, you got to do a percentage and then percentage of the actual cost. My tip is to use a app. They have Mile IQ, or if you have QuickBooks subscription, the QuickBooks app tracks everywhere you go and it's seamless. The IRS requires contemporaneous logs of miles driven. And back in the olden days, they would say, hey, keep a log, write it down. I don't know anybody who did that. Not a single person, right? But these apps, you just open up the app, you're sitting at your doctor's appointment or something like that. You open it up, it shows you everywhere you go and you just business, not business, business, not business, and you're good. So.
Wow, IQ is fantastic.
I use one called Everlands that I really like too. Super easy.
And a lot of people don't know, if you do use QuickBooks, they're like online, their app tracks mileage. So a lot of people have been using QuickBooks Online and that is already included. So retirement. I don't see many real estate agents thinking about retirement. That's a way to reduce taxes. A simple IRA, you can defer 14,000, add 3,000 if you're 50 or over. 401k, you can do 20,500, add 6,500 to that if you're 50 or over. Traditional IRA, 6,000 plus 1,000 for 50 or over. Roth IRA, same. And my tip here is if you miss one, that opportunity missed is an opportunity that does not come back. So 401ks allow you to borrow money if you need to from it. You end up paying interest to yourself. If there's an emergency, you can use those funds. So there's some flexibility there.
Is the 401k, can you use a 401k to purchase property?
Yeah. Mhm. Like, are you talking about investment property or principal
Yeah.
residence? You can do,
Either.
I'm not sure about investment. I don't think that would be
Okay.
one, but like a first time, they do let you borrow money for your first home.
Okay.
So,
I had a client do that one time. They, like, they wouldn't want to take any money out, but if it was their house, they would take out.
Good job.
yeah. So treat it like a loan. I think it comes out of your paycheck as when you do the repayment. Drawback is if you quit your job, I think that's becomes due in full. It's interest, but you're paying it back into your account. So you're paying interest to yourself. So it's not a bad deal. Accounting systems. If you set up a business, you should have an accounting system. I just had a conversation with my client who's has a couple $1 million business and he's got no accounting system. It's a new client and I think he's not going to be a client for long. I think I'm going to help him out this year. And it's just, his question is why do it? And reason number one is simplifies your tax filing, protects you during an audit. I mean, these are all valid reasons, tracks your performance, tracks income and estimated tax payments. And my tip here is I love these accounting software that are cloud-based because you link your bank account. And I looked at QuickBooks Self-Employed for the small business. It's like the Tinder of accounting. You swipe left for personal, right for business, and you're done, right? So how easy is that? So I have a realtor that uses that. She's got an LLC and she's disregarded. And it's perfect. Tracks her mileage, tracks her estimate. On the upper right-hand corner, it says you should make an estimate of $3,000 or $4,000. And it's just so easy. So why not do it? And the cost is just, the cup of coffee, I think. So.
And like in an accounting system like that, what do you think are like the major categories that we could write off, like for our expenses? Like advertising.
Yes, for sure. So anything business related is a write-off, right? So I think I got a couple slides.
Oh, I'm sorry, I'm jumping ahead.
Yeah, I think so. Anything that's business related, I'm going to talk about the home office, right?
Amazing.
Auto,
Okay.
because that's another question that's asked for me. How do I do this? And it all depends on how you're set up. So any business related expense, and you can kind of like reach and try to get into that gray area. Is this business and so business meals, that's 100% deductible in 2021 and 2022. And that's a change, right? It used to be 50.
It used to be 50.
Yeah, it used to be 50%. So it has to be at a restaurant, which is obvious, but people try to grocery store. And the IRS actually says the business owner or employee has to be there. So I don't know if some people tried pulling some kind of scams on that of, hey, the wife and the kids went out. It's a business expense, but the business owner has to be there. Can't be lavish. I don't know. That's subjective. So
Right.
I have a realtor that only sells high-end real multi-million-dollar homes. So maybe $200, $300, $400 lunch might not be lavish for him because he deals with high income individuals. Entertainment's still not deductible. So yeah.
So just get creative in what you consider entertainment. Maybe it was a gift.
Yeah, and business gifts are limited to 25%. So or $25. So that might not work, but some of these places are getting creative, like golf courses and stuff. It's like, hey, buy dinner and we'll give you the round for free, right? So that's where they're trying to like get creative in that area. My tip is keep good records on business meals. Use accounting software. I like that. You get the receipt, you write who you had dinner with and what it was for, right? And can take a picture with your phone and you're done. So, but yeah, I know this is probably big for realtors doing marketing and taking their clients out to lunch, dinner, whatever it may be. Home office. All right, this is a big one. A lot of realtors I work with work from home. You know, COVID, a lot of people working from home. So I get asked this all the time, how do I do my home office? And the answer to that is, as with everything else, it depends on how you have your entity set up. So the rule is that you must use the space exclusively and regularly as your primary place of business. And you can deduct a portion of the mortgage, insurance, utilities, basically the cost of the household. There's a simplified method. It is $5 per square foot up to $1,500. So if you're a sole proprietor, it's easy. There's a spot in there. You deduct it on your Schedule C. If you're running your business as a partnership, it's an unreimbursed partner expense. The issue comes up with S corporations. And this is what I see people doing. They just write themselves a check and they say, well, my business is paying me rent for the use of my house. Well, that really doesn't work, because if you have a rent expense on the business, you'll have rent income on the individual. So it kind of messes that up. Guess you can technically put the house as a depreciable property and use a portion of it, but that just gets complicated. Now, a portion of your house is a rental, the rest is not. So the IRS got rid of unreimbursed employee expenses. Deductions no longer permitted on the individual tax return. So the way to resolve this, if you have an S corporation, is you should establish an accountable plan and have the company reimburse your home office allocations, which you just an accountable plan is like a formal document. Write it up saying, hey, my business is going to do the calculation as if you would be doing on Schedule C, either by simplified method or percentage of all the house expenses, and just write that to yourself for that. And then you have an expense on a business and no income on the personal side.
That's amazing.
That's what we want to do, right? Pick an expense here and not there. So that's a big one that I'm asked is about this home office.
Is it $5 per square foot for the living, like the office space?
Yeah, the office space. So you got to calculate that, or you can take the actual, which, take all your household expenses and calculate the square footage of the business space and do a percentage of the total house, and then you take that percentage of all the expenses. So
Is there a limit like up to
$1,500.
$1,500? I thought it was that's the percentage of the house. I thought you could write off like 25% of the income, utilities, rent, all that stuff.
That's using the other method. The simplified method has a $1,500
It
max.
says you can deduct $1,500 the rent on the house at an office.
That's correct.
$1,500 per month.
Or per year.
Per
That is,
year.
Oh,
Yeah.
you can deduct $1,500
I mean, take whatever you.
expense in an office expense and taxes.
That's if you want to use the simplified method and you have a small space and the IRS wants to make it easy. They're saying there's 1,500. If you have a huge house and you have maybe storage for your signs and stuff like that, and you're using a bigger portion of your house and your expenses are higher, then I would look into using the regular method of actual costs.
Got it.
Tax records. I get asked this sometimes, and how long should I keep my stuff? Generally, the rule is for 3 years. If you have payroll, that's 7 years. Errors on tax returns where they're a 25% difference require 6 years. And I'm a big proponent of getting rid of paper. So decluttering your life declutters your business life. It makes you more efficient. So if you want to keep it, scan it, get rid of the paper and get rid of and if you came to my office and looked at my desk, you'd be like, this guy's lying. He just talked about decluttering. I can't see the top of his desk. So I'll clean up before you come by. But yeah, let's see what's next. Estimated taxes. So why should, do you guys know why you should pay estimated taxes? You typically don't get a paycheck. So, and the government wants their cut ahead of time. So if you don't pay through withholding, you're going to be charged and estimated taxes, you're going to be charged a penalty for not paying. So that's the reason you have to make estimated taxes. And they're necessary for the self-employed, sole proprietors, partnerships, and S corporations, which I see most realtors operate as. So to avoid that penalty, I think I mentioned this before, set up a separate bank account. You get that big commission check, put a percentage in there, and then estimate time comes, you have that money sitting in that account that you can use to make that estimated tax payment. I mean, depending on a commission check, it might be, it might be significant. Don't spend it. I want to talk about small business audit mistakes. The IRS is saying that they're gonna, I'm not sure why they're doing this, but they're gonna audit small businesses by 50% more. So they're gonna increase their audits on small businesses. They're picking on the little guy. I don't know why.
The way you solve that is just become a big business.
Yeah,
I
so-
love your thought process.
So become a big business, right? And I think the reason for this is that they look at some of the big businesses and they do have processes in place. They have the accounting software. So maybe they're not getting luck with the big businesses. They go on a, they go after small owners that may go not have an accounting system, may be very liberal with some of the deductions they're taking. If you continue to have losses on your Schedule Cs, on your S corps, the IRS might look at that and say, this is a hobby. This is not for profit. And I sometimes see that. I'm like, how can your business have, we're in year 5 and you're still operating as a loss? So you're not really profit motivated. Home office is one that they might look at. Are you using that exclusively for business, or is this a spare bedroom that you're saying it's a home office? There's no desk and a bed. Do you write off 100% of your only vehicle? So how do you go grocery shopping? How do you drive your kids to school? So things to consider. Hopefully no one will get audited. No, none of you guys will get audited. It's just, my tip is keep good records and have an accounting software. So, and this goes with every business. Personal should stay on personal, business should stay on business. And that goes from tax and the legal standpoint. The reason you set up a LLC is to separate that from your personal life. So if someone sues you and you're commingling, then they're going to be able to sue you personally, because they're going to say you're not adhering to corporate formalities. So separate. And same thing with the IRS. If you're commingling, then there's going to be an issue there too. A lot of realtors and a lot of small business that I have worked with, they have young children, and I think it's a good idea to teach your children about business. And I have some small clients that I suggest, they've done this, they hire their kids to do some stuff for them in their business, filing, social media. I mean, these kids are better in social media than us, right? So they can improve your business. I mean, it has to be a legit job, cleaning up your office or whatnot. When that happens, you get that same result, right? You're moving an expense from yourself, putting it into your child's, and it's going to become either zero tax or very little tax they pay. And I'm talking about, if they're under 18, maybe 13. So they earn money and they gain valuable real life experience.
And they can get up to 600 still? Or?
That's for like independent contractors. So the standard deduction is like 12,500 now. So you can do up to that amount. If you're a sole proprietor and the child is under 18, you don't have to pay any FICA taxes, and neither will they. So that's great. A couple of my clients I set up and have a Roth IRA set up for the child. So they get a salary. Now they have earned income. They can do a Roth. They put that money in a Roth and they forget about it. 20, 30, 40 years from now, they have a huge amount for retirement. So that's a great strategy to meet a lot of goals there, you know. Oops.
Bella's hired.
I'm sorry.
I said Bella's hired, my 11-year-old niece.
Oh, yeah. I'm looking for people too, so.
Like finding work.
Yeah. Briefly, I wanted to talk about PPP loan forgiveness. I see this on businesses with employees, but this was available for independent contractors. And some took advantage of that. 75% of that is automatically forgiven as a salary replacement. If you use the 24-week period, you can get 100% forgiven. And that's if you don't have additional expenses such as rent, mortgage, interest. This thing is great. I hope that businesses that needed it took advantage. I see sometimes big companies took this money, some of them gave it back, but it was put in place to help, I think, small business that were facing liquidity issues. The loan forgiveness is not taxable. And if you have, and if you have a S corporation or a partnership, this increases your basis in the company. So I have some clients that would take distributions out of their companies, and we'd have to code those as loans from shareholder because they didn't have any basis. Each year we tell them, they forget about it, and this loan is sitting on the books. And this allows us, because now this increases basis, now they can take distributions from the S corporation or partnership, and we can get rid of this loan that is, for all intents and purposes, shouldn't be there. There's no interest, there's no payments on there. The only reason we put it there is to not cause a tax situation for the business owner. So
Which is all I ended up with $5,000 tax liability.
that's all I got. Hope that's.
We have some questions in the chat.
Okay.
So I noticed there's a bunch of questions in the chat. So if we can go
I got
to,
a question too.
can you, to the chat? And if you have a question, will you go stand up there so everyone can hear it? Because they're not gonna be able to hear that too. Or Jack can repeat it. Put it in the chat or let Jack repeat it.
All right, so I'll read out the question. If I switch to S corp from LLC, I have to reach a certain commission amount. No, there's no commission amount that you need to reach. There's a cost to having an S corp. So if you're an LLC and you're a disregarded entity, meaning you haven't elected to be taxed as anything else, it's your compliance costs are very low. You report your income and expenses on Schedule C. You don't have to file a separate tax return. So somebody that does not make a lot in commission wouldn't have an advantage because their costs would be outweighed by the amount of money we can save through doing payroll and having some of that money being taxed with Social Security, and the rest are return on investment. So there isn't a commission. There's not a commission amount. It just depends on whether it's beneficial. If your commission isn't a certain amount, the cost might be outweighed by having to prepare an S corp tax return, hiring a payroll company, paying payroll taxes.
You know what that threshold is? I think we talked about it a few years ago. I think it was around like 70 to 100,000. If you're annually doing that, you should at least be considering.
Yeah. I think it's around there, maybe. So I guess it all depends, because the costs can be, now you have to have more sophisticated accounting because you have to hire somebody to do a S corp tax return. So you basically have compliance costs there and payroll company. So it all depends on the payroll company. But when we do ask that question, when someone asks that question, we'll do an analysis on here's what your taxes will be on your individual, and here's what it will be if you have an S corp. And then the other issue is reasonable salary. What's reasonable salary, right? So Yeah, yeah. So we try to keep that at a minimum, right? Because that's where you save on taxes. So initially, when your business is starting out, reasonable salaries low. When you're making millions of dollars, it might be a little higher. So,
All right.
Somebody asked about the season ticket.
So,
Knights
Raiders tickets
which
was up there. I think we need to scroll back
I think
up. And Jack, just so you know, we have
15
minutes.
15 minutes left.
Yeah.
Okay. If I did I skip a question? I have an LLC. How do I set up? I have an LLC. How do I set up an S corp? I'm checking it from I'm changing it from an LLC to an S corp. It's pretty easy. There's a time limit. You get 75 days from the year that you want to be treated as an S corp. So March 15th is the date. You have to just send the S corp election. I think it's form 2553. So you just elect to be treated as an S corp for that year. If for some reason you still haven't, I have situations where, you know, people come and they haven't filed yet taxes in a year or something. You can do late S corp elections. So it's just filing a form is to be the way you get an S corp is you file a form, you can fax it and wait for your acceptance letter. Pretty easy process.
Doesn't matter.
Well, your option with the IRS is fax or mail.
Oh my
So
God.
if you want to send them stuff and
At least you can fax it.
have it lost, then, you know, I think there's a big pile of mail at the IRS that they haven't responded to. They're so far behind. I'm getting, for my correspondence, I'm getting multiple letters asking for 60 days, another 60 days, and then third letter asking 60 days. So it's a 6-month process to get anything as far as response from the IRS. How about nights tickets, season pass? That's entertainment, not deductible.
Could we slide
That
under
group
advertising?
advertising, yeah, I was thinking that, you know, that's pushing it.
If we got them shirts that said our logo, had our logo on it or something, and they wore them and bought them tickets at the same time. How do we get around that?
Yeah, I don't know. I mean, that's a gray area there. It's funny that Donald Trump got rid of this, right? And this guy had golf courses and all this stuff. So it's weird that he got rid of this entertainment expense. Yeah. So advertising might be a gray area. You might be pushing it a little with.
So what about like, and I'm gonna try to talk really loud so maybe they hear me on Zoom. What about like these cruises where you could take a real estate seminar on a cruise? Is that?
That's
I mean,
considered like,
education,
yeah,
right?
education. Yeah.
Okay, so the whole cost of the cruise is education.
Right. So I had
Well, that's absolutely, that's personal development.
I write that off all the time.
what was that?
Size 7.
Oh, yeah. Personal development. Yeah. So those having a shareholder meeting at a different location could be considered a business expense. We actually had a client get audited for that, and the IRS did allow the trip as a business expense. I think they went on a cruise. They were a real estate agent. They were, selling timeshares or something. So they justified there. They had said they had their shareholder meeting there. The problem that they faced was they took their kids. The kids were disallowed.
Okay.
So they said, and their argument was, well, we'd have to leave them by themselves and pay for a babysitter, and the IRS doesn't care. So we can make all these arguments, but they're like, we don't care. What accounting software do you recommend? I use a lot of different kind of software because I love technology. So it depends on how complicated or how simple your business is. The one where you swipe left and right, that's QuickBooks Self-Employed. I see a lot of people using QuickBooks. It is a good one. If you don't have any experience with accounting software, there's so many. There's Wave, there's Xero. So I think if you go to maybe a CPA, we're most familiar with QuickBooks because that's the 6,000 pound Intuit, Gorilla, and there's so many extensions or apps available for that. I would recommend the cloud software too, because it makes accounting easy. You set up your bank account, transactions flow in there, you tell it what it is, and it learns. Next time it sees that expense, it's green, meals, entertainment, click, yes, 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 your month accounting is done, right? So I would probably recommend QuickBooks, and if you want to venture out to something different, there's Xero's, probably a second one. They're Australian company. They claim they make beautiful accounting software. It looks nice, but it's a little different. So the way that one works is it shows you what your accounting software has and what the bank says. In the middle, there's a button that says either match or tell it what it is. So it's pretty simple too. Takes a little bit used to if you used QuickBooks. So if you don't have any experience there, you might want to try that one. Okay. Okay, this is a two-part question. If you have one car used for personal and business, how much of it can you write off? The percent, so the answer is the percentage of business personal. So somehow you have to calculate a percentage of 50% of business, 50% personal. And, that could be multiple calculations. So however you determine, maybe track miles, maybe do a month of actual tracking and kind of determine a percentage. It's all going to be an estimate. Everything is in accounting is an estimate, it seems like. And on the tax return, they even say those numbers are estimated. So use some sort of method that makes sense. And part two is, do you write off the amount you paid that year or the total purchase price of the vehicle? If you take a mileage, then it's the miles. That's an easy way of doing a vehicle, because then you can figure out what miles you drove for business. If you do a actual expense, you take depreciation. So the cost of the vehicle is used, but it's depreciated and then cut by the percentage of business use. That makes sense.
Now, if I buy a vehicle over 3,500 pounds, do I get to write off the whole dang thing?
If it's 100% business use, then yeah. You're talking about section 179 bonus
Do
depreciation.
all those sections.
Yeah.
It is 179, but I thought it was 6,000 pounds, not 3,500.
Yeah.
Okay.
And well, even regular vehicles now, they got bonus depreciation that you can write off. So
Okay,
you do, if it's 100% business use, and you're talking about SUVs, right?
yeah.
So yeah, you can take accelerated depreciation on that.
Okay.
Any simple app for mileage, MileIQ, right? If you're using QuickBooks Self-Employed or QuickBooks Online, downloading their app onto your phone gives you mileage tracking. So when you open up the app, you can see your mileage, and same thing, I think. You get a choice, business, personal, so. Everlance is good. Okay, that's a suggestion for probably accounting software. Okay.
It's a mileage app too.
Oh, that's a
That's one
mileage
I
app?
use.
I haven't heard of that one. I think that's it.
All right, we've covered all the questions. Amazing.
I had to step out just for a quick second, but so one of the things that I've recommended to people and that I've done myself is that I incorporated my license so that I'm, Steve Matthews, PC, or
You have
it
to
would be
in
an
order to,
LLC.
yeah.
But then the corporation pays for my health insurance, it pays for my car, it pays for my, other expenses like that. And I try to push all of that into the corporation rather than have any of that be for personal, and then just have a separate credit card or debit card for that, for all of those expenses. Am I making a mistake by having it pay everything, or, all of my advertising, everything I do?
No.
Can you
business-wise
repeat
comes
like
out of there?
the bulk of that question?
So the question is, having a corporation pay for all your business expense. So incorporating, when you talk about corporation, you're talking probably a S corporation that
Well,
you're,
it's my LLC.
yeah. So, but it's not a C corp, right? I guess it doesn't really matter, but yeah. So if you set up a corporation or LLC, should those expenses be paid by the company? Health insurance is a little tricky. If you're more than 2% shareholder, that still gets reported on a different spot. It should be on your W-2 as well. But you're absolutely right. All the business expenses should be paid by the company. And I don't know if the rules change. Maybe you guys can tell me this, because that was a mistake I would see with realtors. They get their real estate license and they come up with a company name that was not their name. And then they would tell them that you can't do this. The Secretary of State would tell them you have to incorporate with your name.
That's
And then
correct.
The real
LLC.
estate division
The-
requires
the real
you to
estate- I thought maybe
incorporate
that
your name.
changed. I
No.
thought so that's a big,
Not to my knowledge.
No.
Nope.
But they do allow you to do it now as an LLC. Back when I did it, you could, it'd be a C
PL.
corp or a PC.
Oh,
Right.
yeah. There's a PLLC now too,
Mhm.
professional limited liability company.
Okay, so you can do that as an LLC and
No.
incorporate your license. That also creates a protective shield for you in case somebody wants to sue you. They're actually suing your license and not you individually. And then also, did you talk about paychecks?
Yeah.
Yeah,
And
Covered
the
it.
company
if you have an
paychecks
S
will do
corp,
that.
yeah, you have to pay yourself, right? You can't just take the distribution. So yeah, you're absolutely right. And that's what once you get to a certain level of commissions, what we talked about is you want to set up a S corporation, put yourself on payroll, treat some of that money as money that you earned, and the rest as an investment on all that sweat equity that you put in to become the real estate agent. And that saves you that payroll tax on those distributions. You still get taxed regularly under regular rates, but you don't have to pay. If you were a disregarded entity, you would have to pay self-employment tax on all of that.
All right, so we are pretty much out of time, but Jack, as always, you are a huge wealth of information. So thank you for joining
you.
us. And then
Thank you
what
for
we're gonna
having me.
do, absolutely. And for those of you in Synergy, we're gonna put his information on the WhatsApp string. If you're looking for a new accountant to handle your tax return, are you taking new clients?
Yes.
Excellent. And also for those on Synergy, we've got about a 4-minute potty, get your coffee, get ready for the next Zoom session break. Because we're going to be going on with Tamara. She's going to be taking over for the huddle, and she's going to be letting us know all about the next upcoming summit and all the exciting things going on in Synergy. So thanks everybody for tuning in. I hope this was helpful, even if it saves you some dollars on your taxes. We can all use that right now, especially with inflation. So everything helps. And again, I'm going to drop Jack's information on the WhatsApp string, and thank you for tuning in. We'll see you soon.
Jack?
Thank you, Jack.
Thank you for having me.